Hey everyone, it's Julie here with TipRanks, and today we're taking a look at 3 strong buy software stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 stocks in the technology and software sector. All 3 of these companies have dozens of Wall Street analysts weighing in and come out with a strong buy consensus. So today we're going to take a look at these companies, what it is that they do, and what those Wall Street analysts are predicting for the stock's future. Just before we get into that, this is a heads up that right now TipRanks is having a sale. You can get 40% off our premium subscriptions. So if you've been wanting to unlock some fantastic investment research tools, now is a great time to do so. You can head on over to the TipRanks website to take advantage. Now we came across our 3 stocks today using the TipRanks Stock Screener. Found right under the top of research tools, with the stock screener we narrowed in on stocks with an upside of over 20%, a strong buy consensus from all and the best ranked analysts, and in the technology sector, narrowing down our list below. So for our first strong buy software stock, we're taking a look at Wix. They trade under the ticker WIX, currently priced just above $160 per share. Year to date, the stock has gained about 30%, and in the last 6 months is up over 16%. Wix.com is a website builder and was designed so that anyone with a computer can build their own website free of charge. They are a go-to website builder complete with a full suite of tools to build, manage, and grow your online presence with confidence. You can choose to start from scratch from a designer-made template or create on your own with a powerful AI website builder. They have an intuitive drag-and-drop editor, giving customers the flexibility to customize every aspect of their website. They also offer built-in business solutions and marketing tools. Wix has over 250 million users worldwide, with over 85,000 sites being created per day. They shared their second quarter earnings report back on August 7th, where they did come out with both an earnings and revenue beat and updated their future guidance. For their Q2, they reported earnings per share of $1.67, beating expectations by 32 cents per share. Revenue came in at $435.7 million, which grew over 11% year over year and was nearly $2 million ahead of estimates. They saw meaningful bookings growth acceleration, up 15% year over year, and as such updated their full year bookings outlook to have growth of 13 to 14%. Just over 1 week ago, we had an analyst at Piper Sandler who upgraded their rating on the Wix stock to a buy. They said it was time to revisit the stock following the strong outperformance year to date. They believe the differentiator for stock performance will be potential for improving growth and margin improvements. At current levels, the firm sees a more compelling ownership thesis for Wix, as the company has undergone one of the most significant transformations over the past 2 years, expanding free cash flow margins by 28 points, while growth has remained stable or modestly improved. Wix.com has 19 current analyst ratings, coming in as a strong buy with 15 buy ratings and 4 holds. And analysts' average price target comes in at about $188, implying an upside potential of over 17% from current prices. Looking at those recent ratings down below, on the low end we do have a hold here at $175, which would be an upside of over 9.5%, while our high-end price target comes from Benchmark at $225 for an upside of 40.85%. Number 2 on our list is a company you probably recognize from tax season, that is Intuit. Trading under the ticker INTU, they're currently priced at about $609 per share. Year to date, they are down 2.5%, seeing a lot of ups and downs. Over the past year, they have gained 20%, but in the last 3 months are down over 7%. Intuit is a software company with a strong presence in the personal finance and small business niche. Their best-known products are TurboTax and QuickBooks, which offer tools for tax calculation and filing, along with bookkeeping and basic accounting, easily optimized for both home and small business purposes. Their product lineup also includes MailChimp, the email automation system that has proven popular with marketers. Their products are bent toward making financial and marketing systems easier to use. Just last week, on September 26th, Intuit hosted an Investor Day where they unveiled some new AI-powered innovations. Upcoming innovations across TurboTax and Credit Karma will deliver a single connected consumer financial platform that delivers insights and recommendations year-round and done-for-you experiences at tax time. Intuit shared their Q4 earnings report on August 22nd. The company came out with a solid earnings and revenue beat, strong future guidance, and a big new share buyback program. Their Q4 earnings per share came in at $1.99, beating expectations by 14 cents per share. Revenue grew over 13% to $16.3 billion, and the board approved a new $3 billion stock repurchase authorization, bringing their total authorization to $4.9 billion. Following Investor Day, we have quite a few Wall Street analysts weighing in on the stock. That includes one 5-star analyst from Goldman Sachs. The analyst said that they are incrementally more positive about Intuit's potential to accelerate revenue growth while expanding margins. Their growth profile is shifting from a low average revenue per customer and high-volume business model to a higher value, higher ARPC product offering that is increasingly positioned upmarket, thereby opening up larger total addressable markets and creating a longer runway for growth. With 21 current analyst ratings, the Intuit stock comes in as a strong buy based on 19 buy ratings and just 2 holds. And the average price target comes in at $740, implying an upside potential of 21.5%. Looking at all those ratings down below, we can see a lot of 5-star analysts weighing in here following that Investor Day. On the low end, we have to scroll back to August for our hold rating here at 600 with a slight downside of 1%, while our high-end price target is a bit more recent here from Stifel Nicholas at 795 for an upside of over 30%. Now, if you've made it all the way to our third software stock, then this is a reminder to make sure you hit that thumbs up button and that you're subscribed to the channel as well. Third on the list, we're taking a look at Git. Trading under the ticker GTLB, they're currently priced at $50 per share and are in the red this year. They're down 20% year to date, and in the last 3 months have fallen 5.6%. Gitlab is an open source software company and a leader in DevSecOps. Essentially, they have a simple, specialized platform that customers can use to optimize their own software development for speed, security, and efficiency. The open source nature of GitLab's platform means that users, the coders and developers building their own software systems, as well as the general public, can make additions to the code, putting in improvements or tweaks as they see fit. While GitLab operates on a freemium model, users who require higher levels of functionality or who wish to add higher level upgrades can do so through paid subscriptions. About 1 month ago, on September 3rd, Gitlab shared their Q2 earnings report. They saw both an earnings and revenue beat and increased their full-year guidance. They reported Q2 earnings per share of 15 cents, beating estimates by 5 cents per share, and revenue grew 31% to $182.6 million, beating by nearly $5.5 million. The company saw significant year-over-year operating margin expansion, and now looking forward to the full year, they're anticipating sales between $742 to $744 million. Weighing in on the stock following that earnings report was an analyst from RBC Capital. They noted the company's earnings beat and guidance raise, and that they also generated an impressive margin expansion. The firm liked hearing about a stable demand environment, strength in the enterprise and ultimate adoption, bullish leading indicators, and early opportunity around generative AI. With 22 current analyst ratings, Gitlab does come in as a strong buy based on 18 buy ratings and 4 holds. And analysts' average price target comes in at $63.76, implying an upside potential of 27% from current prices. Looking at those ratings down below, on the low end, we do have a hold here with a downside of 0.32%, while our high-end price target a bit higher than that at $75 for an upside of nearly 50%. So that is a quick look at 3 software stocks, all coming in with a strong buy consensus from Wall Street analysts. Let me know your thoughts on these companies in the comments down below and which one catches your eye the most. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you always stick to your own investment plan. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.